Hi, this is Joseph. In this video today, I'm going to talk about a couple of trades that I executed with the trade copier, and this will give you a pretty good idea if you're considering using my trade copier. One of the questions that I get pretty consistently is, how much money am I going to be making on each trade? Like, what is my typical trade winning size versus my stop loss? So I use a relatively small stop. I mean, everybody's got their own opinion about what a small stop is or what a large stop loss is. I remember back when I first started offering the service in 2007, there was a lot of other people that were doing something similar, like just regular, email alerts or SMS trade alerts, things like that. And they would use like 100 or even 150 pip stop losses. And I'm not talking about like the whole double counting kind of thing. These guys were using like over 100 pip stop loss. So it's not necessary to do that. That's the first thing I want to let you know is that again, if you're considering using my service, I don't use stop loss that's over usually 55 pips. That used to be my old go-to when I first started trading. I didn't want to execute a trade where it would require a stop loss larger than 55 pips. Today it's about 25. That's usually what I set it at. If I have to set in a stop loss after I get into a trade, it's about 25 pips, something like that, very often less. But if I experience a loss with the trade, what will happen or what usually happens is I can detect or see that the trade's not performing as I expect it to. And when a trade's not performing as I expect it to, based on the type of setup that it is, then I'm just going to cut the trade off, which means I don't have to let it run into the 25 pip stop loss or whatever it is I use. Usually it could be a loss of 7, 8, 9, 10, 12 pips. And then that makes it a lot easier for me to earn back the loss if the trade just didn't function, if it just wasn't working out the way I want it to. So today was a really good example. I want to show you two different versions where one trade took off and kept going and kept going and kept going, and that was on the dollar Canadian. But this one here on the euro dollar, this trade, it gave me a setup and it gave me a break. And you can see what it was doing down here during, between the London session and the New York session, but it didn't perform the same way that the dollar Canadian. And that is typical. That happens. I mean, you can't expect them to all move in the same way. So this will give you a really good idea of why I cut out this trade. And the other question that I get is, do I hold onto my trades through the rollover period? The reason why a lot of people want to know that is that if they've got the trade copier connected to their personal account, or they're using something like a prop firm, something like that. And again, I always go back to, remember, if you're going to use my trade copier on a prop firm account, it's your responsibility to make sure that you know the rules and the terms and conditions regarding copying trades from other traders. Some of them will let you do it, some of them won't. And I have absolutely no control over whether the funding company that tells you, yes, they'll let you do it today and then changes the rules in the future. That happens. Sometimes they'll say yes, and then a couple of weeks or a couple of months down the road, they change their terms and conditions about copying trades from other traders. And obviously, I have absolutely no control over that. So just keep that in mind that I would much rather, people try to copy my trades and put it on their own personal account. But if you are going to use it on a prop firm account, again, it is your responsibility. There's so many different prop firms out there and they're always changing the rules. There's no way that I could stay on top of it. It is your responsibility that if you're going to buy a prop firm account, a challenge, an evaluation, make sure you know the rules. So that's the other reason why they want to know if I'm closing out my trades before the rollover. The answer is yes, I do try to close out my trades before the rollover. I don't want to hold on to these trades into the end of the day. I'm usually trying to trade and getting in and out of most of my trades during the New York session. So you can see with this one right here, initially I had a target of right around 60, but it just wasn't working out that way. And I could see when it was behaving up here, the way it was behaving, when it got to this level right around the 50, 55 area, I knew that it was time to cut out the trade. So I cut the trade out and I didn't want to hold it all the way through into the close, because it could have easily dropped a lot lower, below 55. So it was just a matter of taking the profits in that situation. So this was an okay trade. It just wasn't a big trade. Now, the other trade that was a good trade and it behaved the way I expected it to was a dollar Canadian. So you can see the same similar behavior, just in the opposite direction. compared to what we just saw in the euro dollar. So in the euro dollar, you can see all of that choppy behavior down here between the London session and the New York session. And then over here on the dollar Canadian, it was pretty much the mere opposite. So you can see it all up here at resistance, and then it kind of broke down here. This is a 15-minute chart, by the way. And then here was my breakout. This is an actual signal bar that I'm looking for. And you can see first I get the signal. That's kind of like a signal. Here's my trigger. That's my trigger bar. That's my signal. Here's my signal. I just kind of wait very often, and it doesn't happen all the times, but very often I'm anticipating some retests, and you can see what I'm doing here with the moving average just as a guideline. And then this one performed a lot better. This was moving a lot faster. And here, one of my first targets is obviously going to be the double zero. I'm going to pay attention to see what happens here at the double zero. And then the next level is going to be, and I'll go ahead and tighten it up. It was just that resistance area right here. Old resistance area from last Friday turning into new support right here. That's all I was looking at. It looked pretty obvious. It's a easy an area that price is going to gravitate to, and that's exactly what it did. Now the other thing that I'm doing, and I'll share a tip with you, that if you're struggling, so sometimes you look at some of these trades as they unfold. And back when I first started trading, I would get into a move like this, and I would just, hold for maybe 15, 20 minutes or something like that, and I would grab whatever I could, and I would think, okay, that's great, 15 points, and I was happy. But I was out of the trade at that point, and I wasn't scaling out back then when I first started trading. I was trying to learn how to scale in and scale out, that kind of thing. But I would notice after I would, get out of the trade, I would sit there and watch it for another couple more hours, and it would just keep going for like another 20, 30 more points, and I would think to myself, how can I get more of those moves? That was really frustrating to me. And I used to read, and hear people say in videos on the internet, they would talk about leaving money on the table. And this was one of those classic examples of leaving money on the table. Well, what I didn't understand is that, and this is, I've shared this in other videos, there's some work that a gentleman by the name of William or Bill McLaren, and he's got a short PDF. I think it's like 70 or 80 pages, really easy to read, and you'll get a lot out of it. And the basic premise of his PDF, and on this small PDF and some of the work he's done is in understanding trends. So one of the things that I get from Bill McLaren's work is that a trader does not fully understand a trend until the trader also understands counter trend behavior. So let's take a look at this move right here during the London session. You can see it starts trending and it starts moving. You get the breakout, right? And then it starts trending and it moves up, and then you get this pullback. Well, a long time ago when I first started trading, on a pullback like that, when it wasn't going any further, I would close out the trade. Or I would close out the trade if it, printed a bearish engulfing candle, and I would think, okay, that's the end of the move. And then it would turn around and would just keep going, and it would confuse me. So I didn't understand what I was doing. And this is what Bill McLaren's talking about, is that I didn't fully understand in the beginning. I didn't fully understand trend moves and counter trend behavior, because it was a counter trend behavior that I didn't understand. I understand what a trend looked like. I can see it here, but I didn't understand the counter trend behavior. And you can study counter trend behavior, which helps keep you in the trade a lot longer, so you don't get scared or spooked out of a trade too soon. So that's what was happening to me when I didn't understand counter trend behavior. I was getting out of the trades too soon. I would get scared out of them. But as it turns out, this is just a typical counter trend move in an uptrend, and there's nothing to be afraid of on a move like that. You can see it's just a 1-bar pullback, and then it resumes, and then another 1-bar pullback, and then it resumes. And then you can see that there's a very different behavior pattern up here once to indicate that this uptrend here is over with, once that whole move is done, and then maybe we're likely to start heading down in the opposite direction. So I just implement the same behavior, the same study of the trend as it unfolds. There's a bar that's going in my favor. There's another bar, another bar. That bar right there is not enough to tell me to get out of the trade and that the trend's over with. So I hold for another bar, and I hold for another bar, and I hold for another one and another one. And you can see that this 2-bar pullback right here, again, this is just a counter trend. This is not enough for me. The way I trade it, the way I understand counter trends, and the way I execute my trades, this is not enough for me to get out of the trade and close it out. And neither is this bearish engulfing candle. I still have to wait to see what's going to happen next. You can see how it turns out. And sometimes the bearish engulfing candle will have another small bodied candle after it, and then it resumes. It all depends. And it depends based all of this on context in context and also the time of day that these are actually moving. You can see this is the whole London session. That's a pretty active session. This is all during the New York session. That's a pretty active session. So this trade just kept going and going and going. And here is where I get my first sort of heads up, and then it comes back down one more time. But I could trade it right here, the next level, and I still use them. Every once in a while, I'll use the psychological levels. So if I get really close to a support level, well, I know it doesn't have to hit support on the number to qualify that that trade is done. In other words, that it did pretty much what I expected. The next level through the double zero is going to be the 80. Well, the 80 right here, I have 78, which is where I closed out the trade, but 80 is right here. That's a psychological level. And I've used psychological levels for, I don't know, like I started using them after the first year or two when I first started trading. So this is back in 2001 and 2002. I learned about psychological levels from Kathy Lean's book. I think she put out a book back in, I don't know, it was right around 2002 or 2003, perhaps. Anyway, somewhere around there. I was learning that I learned the trading and using psychological levels as guides or levels that I might want to consider closing out my trades from Kathy Lean and a few other people. Yeah, I think even Martin Pring talked about it. But anyway, it was just before this resistance level that you could see from last Friday's high. So that's I was satisfied with that. Getting in at 15, closing out the trade right around 80 or 78. I'm done with the trade. So again, the other thing that I needed to be mindful of was that this is getting later in the day. This is 9 o'clock California time. So this is getting late in the day for me, and I want to get out of the trade, and I don't want to hold the trade through the rollover period. So to answer a couple of those questions is, do I hold through the rollover period? No, I don't. I get out of the trades. Usually, I'm done with the trade a lot earlier, but that doesn't mean that, I'm not going to see a trade like this a few times a week. This is also kind of common. The other thing is I'm going to manage the trade as I'm in the trade. And you can see that the behavior of this one was a lot different than the behavior here in the euro dollar. So I had to get out of the trade. Now, eventually it ended up hitting my target and went a lot further, but I had to close out the trade. I wanted to close out the trade and be done with the trade before the rollover. And you can see I could have picked up the trade. I did not take this trade, but I could have picked up this trade a little bit later. And I'm just going to wait for the next session, what it's going to do during the London session and the New York session. So that'll give you two examples. Sometimes one trade's going to be a lot bigger and another trade may be a little bit smaller. And the next time I get a move like this on the euro dollar, it's going to be a big move. Like this was, often whenever I trade off of a key level of support like this, it moves a lot faster and a lot more dramatic. But tomorrow's Wednesday. Wednesday, very often we'll set up a big moving day. And it may be that this behavior, this contained behavior here in the euro dollar is sort of helping build up that momentum for tomorrow if it does provide an opportunity for one of those big parabolic moves that we see that very often will occur not only or exclusively on Wednesdays or Fridays, but very often it does develop on those days. So we'll see what tomorrow on Wednesday, what it does. And you can see we're already trading into Asian session Wednesday here. It's still Tuesday night in California. So we'll see what happens on Wednesday. It should be a pretty decent day, but I'll never know, until I get there. So anyway, that'll give you an idea of what these days look like. Again, a trade here on the dollar Canadian and a trade here on the euro dollar. Now, one last question that it might be going through your mind, and I get this question every once in a while, is how many trades will be executed at one particular time? So you can set up the trade copier. Depending on how you set up the trade copier, you select the lot size or the leverage that you want to use. You can use 1%, 2%, 3%. I always recommend start off small and then add, as you build up money in the account. Or you can use a lot size. You can do 1.0 or 0.1 or 0.01, whatever it is that you're comfortable with. Now, the other thing that you want to remember is depending on the lot size that you use, the trade copier is going to take a look at what is available in your account, the available margin, what you can tap into, right? So if there isn't enough money let's say I open up two trades, if there isn't enough money to open up a second trade, then it won't open up a second trade. You've used the amount of capital available to put on any given trade, depending on the lot sizing that you're using. and that will determine how many trades you can get. I don't normally have two trades running simultaneously. I don't usually do that, but it was just one of those days where it was just a perfect opportunity. I could see what was going on with the euro here. It was a pretty decent opportunity until it stalled out right there. And then the dollar Canadian was another one. So if you don't get two trades, you only get one, it's because of the lot sizing or the leverage that you decide to use. You can increase the lot size, which would, perhaps as long as you've got sufficient capital in the account as well, you got to be mindful of that because you don't want to overexpose capital. I don't recommend doing that. But again, I don't usually have two trades simultaneously. Just every once in a while, I might. And but again, you can protect yourself if you don't want two trades. You only want one trade at a time. That's okay. The unfortunate situation in that is if you only had one trade and that's the only trade you want. You only want one trade at a time. You can't select which trade it's going to execute. You know what I mean? You can't say, well, I want the biggest trade that you're going to take. I don't know what it's going to turn out like. You don't really know, right? It could have stalled right here at the 00 and then just kind of bounced around for a little while right into the close. That could have been a very real possibility, which means both of these trades, the euro dollar and the dollar Canadian, would have produced about the same. But that's not the case today. So again, we don't really know until we get there. We don't know what happens until the trade starts to work. I presume that it's going to do something like this. These are possibilities. I know where I'm going to trade it to if it takes out the first target and goes to the next one, but we never really know. So anyway, there are ways that you can protect yourself with a trade copier. Simply use the lot sizing that you want to use, and it won't go beyond that if there isn't available capital for it to tap into to open up a second trade. That's okay. That's perfect. That's exactly what you want. That's preservation of capital for you, and then that way you don't overexpose the capital in your account. You don't want to do that with your trading accounts. So there's a lot of safety measures with the trade copier, and it's a really robust trade copier, and it's really fast. As I execute these trades in my own platform, it's instant. It'll go right into your account within moments, like with just the blink of an eye. And if I change the stop loss or as soon as I close out the trade copier will instantly duplicate everything that I'm doing.